Hi everyone, I'm Lynette Zhang, Chief Market Analyst here at ITM Trading, a full-service physical precious metals, gold and silver brokerage house. So today I want to keep you updated on what's happening with the petrodollar, because keep in mind that globally everybody must use dollars in order to buy oil. That's the petrodollar. Well, what we know is that Saudi Arabia, who's the one that signed that petrodollar deal, wants to break away from oil since they are so highly dependent on it in this environment. And in fact, they generate 40% of their economy is based on oil, and 90% of the Saudi government's budget comes from oil production or profits. So you can see that's pretty significant for them. And in this environment of very low oil prices, what have they been doing? They have been selling off reserves, particularly U.S. Treasuries, selling off reserves in order to support their economy. So the other thing, and this is something that always happens in a money standard transition, is governments, states, etc. are forced to sell off income producing assets. If they need money, that's what they're going to do. So we've talked about the IPO, initial public offering, that they're positioning their crown jewel. Now, what I want you to know about that is that's how they generate their money, and they're working on cleaning up their balance sheet. They plan on coming out with that IPO in 2018, but it's so interconnected with the state and the government and all of the funding that they have to try and disconnect it. So they're working on it. Okay, why does this really matter? Well, this is the global break-even, but here's Saudi Arabia's break-even is 96 bucks a barrel. So that's why they're having to use all of those reserves in this very low environment for oil. You might recall this.
You don't have to hold
chart.
This up. Carl's got them.
Oh, that's right. Okay,
No,
sorry.
She holds them up though.
Oh, I did. Okay, sorry about that. Okay. So you might recall this graph, and this is a long-term chart on spot oil. This is where we had the pattern shift, and certainly it's pretty obvious that the pattern is different here than all the way across here. A whole lot more volatility and in a negative trend. Now, this is Wall Street. And the government has even done studies on the impact of derivatives in the oil markets. But for Saudi Arabia, they want the price of oil to be up. So we know that in September 2016, they went ahead and they cut production. Both OPEC and non-OPEC nations cut production. And then, because it worked for a minute or two, but then it started to decline again, they came out in May and they said that they would extend those cuts through 2018. Because the higher the price of oil, the more they're going to be able to generate in that IPO. But that was May. This was June 6th. Okay, so Wall Street said no. Now look, they managed to keep it pretty stable between that announcement that they would extend the cuts and up until June 6th. Would you have known at any point along here that this is what's going to happen? And that's part of the point, is that people think that they can anticipate when there's going to be a sudden drop or there's going to be a drop. And I got news for you. Wall Street's a lot smarter than we are. And they have a whole lot more tools than we do. So this graph I actually pulled yesterday from stock charts. And you can see lower highs and lower lows. And you can also see that this is where they signed that accord in September. It did manage to push the price up a little bit. But now it's testing this upper support level on increasing volume. That means that there's a lot of selling of these oil contracts. This was this morning before I even came into work. So they need a $96 break even. This morning it was at $42.93. Can you see the problem? Can you see why they have to sell their crown jewel? Can you see why they do not want to be dependent on oil? And because oil is priced in terms of dollars, how that might impact you and me that use dollars, work for dollars, save dollars. Well, I don't save dollars, I save gold and silver. But most people will save in their dollars. If they don't need to use dollars to buy oil, then they don't need those excess dollars, and you see a decline in reserves. Okay, so this is where the competition is coming in. We know what the sovereigns, what the government wants. They want higher oil prices, they need it. And not just them, but any energy dependent country. But Wall Street does not, because this whole market has been turned into a financial product, just like everything else. There is no real price discovery. So up here, we've talked about the CME a lot. The CME generates 20% of their income on trading those oil futures, 20% of their revenue. It benefits them to continue to trade. And what happens is the more that they trade, in this particular case, it's pushing the price down. Now, I want you to think about that for a minute, because anybody that uses oil to generate their income, they need a higher price. But Wall Street, if they can force them to sell off their crown jewels, who buys? Okay, now this is the most current COT report, Commitment of Traders, and you can see that it's rising, and it's actually at the highest level that it's ever been since they started tracking it. But when there is an increase, that means that open interest means that new money is flowing into this marketplace, and the result is most likely to be that the present trend, so up, down, or sideways, in this case up, is likely to continue. That means, let me just grab this again, okay? We can see that this trend is clearly down. Now, they're trying, Saudi Arabia and other income producing nations are trying to push it down, but they're not doing it as much with derivatives, which I don't know why they don't, frankly. It doesn't cost them but $1.10 to move 500 barrels of oil, but maybe Wall Street can... Did it just die? Okay, maybe Wall Street is more powerful than the sovereigns. We've seen it with sovereign debt and Wall Street going in and forcing payment. We're seeing it with oil. And all of this brings us back to the death of the petrodollar. Now again, this impacts you and me because we work for and attempt to save dollars. The fewer dollars that are needed globally, the less value that the dollar has, and that could easily generate hyperinflation here. So we're going to continue to keep our eye on this, keep those questions coming, and follow us on Twitter, like us on Facebook, and subscribe to us on YouTube. If you like this video, give us a thumbs up, but please make sure you call us. There's lots of smart people here to answer any questions that you have, and we all work together as a team. 888-696-4653. And you be safe out there. Bye-bye.